How to use Bell Direct properly. Beginner mistakes that cost you. Bell Direct is one of Australia's most popular online trading platforms, but most beginners lose money here not because of the markets, but because they misuse the platform. Let's go through how to use it properly. The biggest mistake new investors make is trading without understanding Bell Direct's research tools. Don't just buy a stock because it's trending. Check the research tab. It includes analyst ratings, price targets, and fundamental data. Skipping this is like flying blind. Next, use the watchlist feature. Many users overlook it, but tracking potential investments helps you spot trends before making a move. Add stocks you're curious about and observe how they behave before committing. Another beginner mistake is ignoring trading fees. Bell Direct's transparent pricing is great, but if you make frequent small trades, costs add up fast. Plan your buys in batches to reduce brokerage expenses. Also, use the conditional orders tool. It lets you automate buys or sells when prices hit your target levels, so you don't have to watch the screen all day. Most beginners get this wrong and miss great entry points. Pro tip: check the market depth view before placing orders. It shows real-time buyer and seller activity, giving you insight into short-term price movement. Finally, review your portfolio monthly. Bell Direct's performance tracker helps you see your true return after fees, something most people forget to calculate. The surprising truth: Bell Direct isn't just a place to trade, it's a platform to strategize. So use its research, automation, and analytics together. When you do, you'll trade smarter, stay informed, and make every decision backed by real data.